Robinson, and I am a business advisor here at Collective. And Collective is you can kind of think of us as kind of like an all-in-one solution for a self-employed business owner. Um, we are a company that specializes in S corps. So what we would do is we would, have an initial consultation with you, kind of go through your business, kind of learn more about it, and even determine if Collective would be a good fit for you. So that's the first step, and then we would elect S corp status for you. That's the first step. If you don't already have an LLC, if not, we form an LLC first, elect your S corp status, and then run your payroll, your bookkeeping, and handle your business tax filing at the end of the year. So we pretty much do the whole thing. But today I am here to run what we like to call a Tax Tuesday. So essentially what it is, it's a AMA, it's an Ask Me Anything surrounding taxes and bookkeeping, or, just kind of, questions about best practices on how to run your LLC, or, anything like that. So, whatever questions you have, like, feel free to bring them at me, and I'll do my best to answer them. But also too, just to kind of get the some of this stuff out of the way, like, keep in mind, like, please, don't consider any of what I'm saying to be legal advice, or, official tax advice, or anything like that. I haven't examined your situation closely. Like, I don't know, what you should do with your business. Some of the stuff I'm saying could be incorrect. Like, tax laws can be really complex. So before you do anything, like, with your business, consult with a CPA, talk to a tax attorney, or, just talk to, some sort of tax professional before you take any official action with this. But now that we got that stuff out of the way, let's go ahead and get started on the questions. And I think we already have some questions that have popped in. Okay. The first one is, what is an S corp? Well, that's a good first question, of course. Since we're talking about S corp, we might as well explain what they are. But an S corp, there's a lot of people that have kind of a misrepresentation about what an S corp, actually is. An S corp isn't a business entity, by itself. It's not, despite the name, which I know sounds a little strange here, but an S corp isn't necessarily a corporation. An S corp is a tax election. So it's a way for a business entity to get taxed. So you either have to be like an LLC or a corporation before you can even elect, the S corp tax status. But essentially, the reason why you'd want to do that is to save on the self-employment tax. That's the reason. And before you become an S corp, or before you make an S corp election, that's the technical name for it. Before that happens, all of your, like, a huge chunk of your net income is subject to the self-employment tax, which is a flat tax rate of 15.3%. So, for example, let's say that, in 2024, someone has an LLC and they expect to make like $150,000 net income, something like that. How someone would come up with their self-employment tax is they would take 150,000 and they'd multiply it by 15.3%. Like, all of your money is subject to it. But what happens with an S corp election is essentially you become a W-2 employee of your own business, essentially. Like, you're still the owner, of course, like, it's still your business, but for tax purposes, you literally become employed by it. And, since you're an employee, your business will pay you a wage. It'll pay you a salary, just like you'd make if you work for someone else, like as a W-2 employee. But the cool thing about S corps is that the only sort of chunk of your earnings that's subject to the self-employment tax is your salary. So, for example, let's say, like I mentioned earlier, let's just assume that someone made $150,000 last year, or this year, and let's also assume that they take a 40% salary. That won't necessarily be your salary, like that's not exact, but that's just kind of a rule of thumb, or just for example purposes. So that's a $60,000 salary. 40% of 150 grand. So essentially, the only chunk of that earnings that's subject to the self-employment tax is the $60,000. But the other $90,000, that's considered a distribution on your behalf. Like, conceptually speaking, like it's not quite a dividend, but some people use the term dividend for that the chunk of earnings. But long story short, that $90,000 is no longer subject to the self-employment tax at all. So of course, assuming if someone made that much money, an S corp would save them around $13,770 in the self-employment tax. So once you reach a certain income level, it can be quite advantageous to become an S corp or make an S corp election. All right. I was wondering, what is the deadline? What is the deadline this year? Thanks so much for your question. Well, it depends on which deadline that you're talking about. So there's a few deadlines. For one, if you're a current LLC, technically the deadline to elect the S corp tax status for the current tax year for 2024, which was March 15th. So it was a few days ago. But the fortunate thing about it is what you can do is, like, if you weren't aware that if you weren't aware that you needed to elect the status by that time, then you can always what we would do is we would make a reasonable cause argument with the S corp election, and essentially what it does is it kind of it makes a reasonable cause argument to the IRS, like this is why I didn't file by this time. I didn't really know that this was the deadline, and those are usually approved. But also, it's best practice to get your S corp election in as close to the deadline as possible. It just kind of it looks better. So that's the S corp deadline. But for current S corps, there's another deadline. So if you have an S corp, then you have an S corp tax return requirement that's due. And S corp returns, those are due by March 15th of every year. So that's one deadline. But another deadline, of course, is your personal tax return. That one's due. That one's due. I want to say it should be due April 15th. Sometimes they're due on April 18th, but the usual date is April 15th. So there's a lot of deadlines that are coming up or that have already passed. Okay. Can you explain the S corp retro backdate collective promotion? Isn't the deadline March 15th? Well, like I just said, technically there is a deadline by March 15th to make an S corp election, but like I said, what we would do is try to make some sort of reasonable cause argument if you qualified for one, and if you qualify for one, like those are usually accepted. It's usually not a big deal. So there's still time to do that. But like I said, it's a good idea to do it as soon as possible, like as close to the deadline as possible. So you should do it right away with an S corp. Above what amount of earnings per year does it make sense to have an S corp versus an LLC? It's a very good question. So really what we say here at Collective is we say around $60,000 net income If you're netting around $60,000, then uh, that's when it's worth. That's kind of the sweet spot to join Collective and become an S corp, is what we say. And the reason we say that is when someone is netting around 60,000, and these are very general numbers. Like, this could be different in your situation. Like, these aren't exact, but generally, what I see, if someone is netting around $60,000, then generally I see a tax savings of around $5,500 a year in the self-employment tax, usually with an S corp. And those that right there is a good, especially if you go the annual route, that's close to, $2,000 above Collective's fee for the entire year, like to handle, the S corp and handle all that stuff that comes with it. So, that's that's why we say $60,000. It's kind of the sweet spot. It's a good rule of thumb to just say, I can reasonably expect, just on average, to save more money than my collective fee if I'm making at least this much money with an S corp. I am interested. Is email the best option for communication? I would say, well, there's a couple things that you can do. You can schedule something on our website. You can go to collective.com and schedule a call with a new business advisor. You can share your email and just information with us. Send us a message on Instagram. We can reach out to you then. But then we would love to have a conversation with you and see if Collective would be a good fit for your business. Thank you so much for your interest, by the way. What's the difference? What's the difference between getting an S corp with Collective versus doing it myself? Well, for one, convenience. That's the first thing I would say. Is when you make an S corp election, it's just, in my opinion, it's way more complicated than just being a sole proprietorship or just kind of being at the LLC stage. Like, there's just more things that you've got to juggle. You've got to juggle a balance sheet, because with an S corp and your accounting, you usually need to track a balance sheet when you have an S corp election. You've got to run payroll on yourself, and you've got to kind of know or kind of I guess do the best you can to determine what's reasonable, and to keep yourself safe from the IRS. And you've got to file your S corp tax return at the end of the year. That's another, like, there's just more things you got to do with an S corp than you do with an LLC or a sole proprietorship. And with Collective, we essentially handle all that stuff. I mentioned earlier, like, the first thing we do is set up your LLC if you needed one, and then we would make your S corp election, and then we'd handle your payroll, because you yourself will be on payroll, of course, with this new tax structure. So we'll do that, and then we would take over your bookkeeping, and we close up the books every month. So every month we'll give you your accounting reports. So your profit and loss statement, your cash flow statement, and a balance sheet, every month for your books. And then there's someone on your team called a member relationship manager, and you can essentially think of them as your account manager. So if you ever have a question, need some guidance on something, or just kind of want to run through your books, or just need some guidance, you can reach out to them at any time and have a conversation. And then kind of as we run your books throughout the year, at the end of the year we'll file your S corp tax return, because you'll have it's called an 1120S. It's a business return that kind of comes into existence. So we'll file that one for you as well. So anything sort of like tax, bookkeeping, or administrative wise that has to do with your S corp, Collective would handle for you. How much is the cost monthly? Well, you've got a couple ways to pay Collective. If you go the month-to-month route, it's $349 a month, at will contract. If you pay in full, just for 12 months at a time, they give you 15% off the total price. So then that averages about $296 a month when you do the annual route. And also, when you first come on board, there's usually a one-time $199 onboarding fee to get everything set up, get everything structured, and we'd go from there. But of course, if you do the annual route, you save quite a bit of money if you do the annual route. But also, you can go to our website and our fees are outlined there. But keep in mind too that Collective is all inclusive, so there's no extra fees to file tax returns or do anything like that. And really, the only fees that aren't covered in the subscription are fees to the government on your behalf. So let's say that you haven't set up an LLC yet. You need to set up an LLC. There would be your state LLC registration fee that you'd have, but we don't upcharge that or anything. We just we just pay that straight over to the government. But it's all inclusive. Right. Yes, Morgan says, or talk to an existing member and get a referral code to get your first month free. Oh, I think I cut out there. But yes, Morgan said, or talk to an existing member and get a referral code to get your first month free. That's also possible. If you're a member and you sign up, then you get your own referral code, and anyone that you refer to Collective gets their first month free, and then you, as a member, get $600, per referral. So it's a really good deal. And then kind of like a registered agent. So yes, so we'll provide registered agent services. We actually contract with a company, and it's included in your membership with Collective, that would provide registered agent services to you. So those will be taken care of. All right. Are LLCs not needed for tax deductions? Well, technically, LLCs aren't needed to write off expenses. No. LLCs, what they are is they provide essentially, separation from your, personal assets and your business assets. So, let's say like in certain situations, if you ever get sued, or and I'm not a lawyer, so please don't sort of consider this as official legal advice or anything like that. But if you ever get sued, or if there's other sort of business debts that you have, in a lot of cases, it won't affect your personal assets. Like it won't, kind of bleed over into your personal situation. So an LLC can provide protection there. But it's not needed for tax deductions or to to write off business expenses. You can still do that as a sole proprietorship. Does our fee include the payroll management system? Yes, it does. So we use actually Gusto's payroll technology in your Collective dashboard. Like when you'll have a dashboard with Collective, and the payroll processor will be embedded in your Collective dashboard in the same way that that your accounting software is as well. So if you ever need to use the payroll processor, if you ever need to pay yourself or pay your contractors, that is included in your membership to use that technology. What's the best way to track expenses? Well, obviously, I'm a little biased, but The best way to track expenses is to join Collective, of course. We would handle the bookkeeping end of things, so you wouldn't have to worry about it. But let's say that if you were just doing it yourself or something like that, personally, I like the Wave software. I just think that that's it's really easy to use accounting software. Like it's really clean. So if you're just if you're a smaller business, like especially if you're below that sort of $60,000 mark, then Wave is usually a good option. But if you're above that 60, if you're either at that 60 grand mark or above it, then Collective could very well be a good option for you as well. What's the difference between net income and gross income? That's a very good question. So, gross income, let's start off with that. Gross income is just your total income, like just the total amount of money that you accept in your business. So, let's say that you're, a marketing consultant or, something like that. And let's say that the total amount of money that you get from your clients is, $150,000 in a year. That's your gross income for that year. But you can also write off business expenses from that income. So usually you can take the home office deduction, or you can write off subscriptions you have, or contractor payments, things like that. And then you'll arrive at your net income. And you're typically only taxed on in most situations, you're only taxed on your net income, meaning your total income minus your business expenses. So let's say that your gross income is 150 grand, and you have like $30,000 in business expenses. Your net income is now 120 grand. So you're typically only subject to the self-employment tax and the income tax on the 120 grand. That's the difference between gross income and net income. All right. How can I become a Collective member or schedule a call? Can I just go to the link in the bio? You can go to the link in the bio. You can send us a message here on social media, on Instagram. We'd be happy to get you a link to speak to a professional. Or you could also go to our website, kind of fill out the S Corp tax savings calculator, and it'll allow you to schedule a call there. So there's a few ways that you can schedule a call. But yeah, if you think that an S Corp would be a good fit for you, or if you'd like Collective to take some of this stuff off your hands, then we'd love to have a conversation with you. And it's at least scheduling a call to see if it would be a good fit for your business. Okay. What's the difference between an LLC and a corporation? That's another good question. Well, a corporation, essentially, there are two sort of entities that can become S corps very generally, and those are LLCs and corporations. And both LLCs and corporations, they're formed with your state, usually your state of residence, with the Secretary of State's office. But the difference between an LLC and a corp is with a corporation, usually you do it for a few reasons. Sometimes it can be a little bit easier to fundraise with a corporation, and it can be a little bit easier to have several owners, or multiple owners in your business. So that's kind of the general reason why people would want to become corporations. But also keep in mind that corporations, like, you usually need to have a board of directors, have annual board meetings, and keep board meeting minutes, and things like that. So there's an additional administrative requirements for corps than there are over LLCs. So usually small business owners need to be an LLC. But of course, with anything, anything with taxes and business structures, it kind of depends on your situation. righty. The admin goes with S corp also. No, the S corp. The good news about that is that if your entity is an LLC, making an S corp election doesn't trigger any sort of corporate requirements or anything like that. So that's another benefit too of having an LLC with an S corp election. It doesn't you don't if you're not a corporation, you don't have to have a board of directors or anything like that. Okay. Okay. In what would real estate companies want to elect S corp tax status? Well, that kind of depends. It depends on the situation with what you mean by real estate. Like, let's say that if you just kind of own passive rental properties, usually you wouldn't want to put them under an S corp because usually passive rental income and just other passive income like that, it's typically not subject to the self-employment tax, and that's really a reason why you'd want to make an S corp election is to save on the self-employment tax. So usually you wouldn't want rental incomes underneath them. But let's say that if you're like an active house flipper, or you're doing active work, sometimes those income sources can be subject to the self-employment tax. So you might want to consider an S corp. In what situations would you want to become a C corp? Well, a C corp, let's say, because with an S corp, you can only have up to 100 owners in your business. So that's something to keep in mind. And then with a C corp, you're allowed to it's easier to have more owners than that, more people that have an ownership interest in the business. So that's a big reason if you ever wanted to have more owners. Is there any industry where collective can't assist? That's a very good question. Well, there are. Well, I guess what I would say is that there's a couple sort of business entities that we can't handle right now. So there are some licensed individuals like attorneys or physicians or people like that are required by their state to set up what's called a PLLC. It's called a professional limited liability company, or they might have to set up something called a PC. It's called a professional corporation. So those types of entities, collective at this time isn't able to take care of. We can only work with single member LLCs, and we're also not able to service C corporations right now, or corporations that are electing as an S corp. So that's kind of the main thing that I would say. But also too, let's say that we couldn't handle the taxes for your rental properties. Let's say that you've got a bunch of personal rental properties that you're renting out. Collective couldn't handle those. So keep that in mind too. But that's a very good question. Okay, and I think that is all the time that I have left today. I actually have another meeting that I have to hop on with a prospective collective member. But this was so much fun. I was really excited, like I am every week, to have this. And I hope to talk to all of you next week at our next Tax Tuesday. All right, talk to you.